Fix and flip loans. Hey, what's going on, everybody? It's Jeff Javarthan, Jeff the Mortgage Pro. I hope you're doing really well today. This is kind of an interesting show. We're going to talk about fixing and flipping a property. Now, these are things that you've definitely seen. They've been on TV for probably at least 20, 25 years now, where you see investors buying property. They do a little bit of rehab work. Sometimes it's a little bit, sometimes it's a lot, and then they turn around and sell the property for a profit. But have you ever wondered how they finance those properties? Well, the fix and flip loan is a way that you can do that. It's not the only way by any means. You know, there's all sorts of different ways to be able to buy property and sell property. But in this instance, this is the fix and flip type of a loan. And what I thought would be a great idea is for us to go through this type of a project for you. So before we get into it, if you could do me a huge favor, if you like these videos, can you go ahead and click the like button down below? And if you really like the videos, please go ahead and subscribe. I'd love to have you as part of this journey of getting as much mortgage information and product out there as I can to help you as the consumer to be able to buy a property, whatever it's whether it's a residential property for your first time home buyers or for its investments, whatever it is. I'd love to be able to help you out. Okay, so let's jump into the fix and flip strategy here. So this is when you buy a property, you rehab it or renovate it, whatever you want to call it, and then you turn around and you sell the property for a profit going forward. And again, you've seen lots of TV shows about this, but have you ever really wondered why or how they do this? So let's go through some of the guidelines on a couple of the different investors that I have to show you kind of what those budgets look like. And then I'll give you an example towards the end here so you can get an idea of what the numbers, how they pencil out and why that they work sometimes. So let's start out with some of the guidelines for this type of a transaction. So $100,000 is typically the minimum loan amount. So you need to put 80% down on a property. So if our loan amount is $100,000, we're obviously going to need more than that for a purchase price to be able to buy a property. There's a couple investors, not very many of them, that will go down to a $75,000 loan amount. And the reason being that they don't go any lower than that is because their cost of money is also expensive as well. So you got to look at it from the bank or the lender's perspective that if they're going to lend lower amounts of money under $100,000, they have to still be able to get their compensation out of it. So the lower the loan amount, the harder it is for those people to do the loans and get the same amount of money in profit for them in doing these types of transactions. So $100,000 is typically the loan amount. We usually need a 680 credit score or better. So if you are below that, there's definitely ways to work with you, but the terms are definitely not going to be anywhere near as good as what you could have if you have a higher credit score. So try to work on your credit, get it up above 680 if you can, and let's see if we can get this type of a loan for you. You have to have, or the type of loan that is called a 12 or 24 month bridge financing. And what that means is that it's a short-term loan. It's amortized over a 30-year period, but you only have the loan for 12 or 24 months, whatever you specify when you're trying to buy the property. The smaller projects where maybe you're doing some just light work on the property, that's probably going to be a 12-month bridge. But if you're going to do some major renovations and repairs on the property, you're probably going to want that 24-month bridge loan financing, okay? And again, they're amortized over a longer period of time, but the term in which you have to be able to finish the project and then sell the property is either 12 or 24 months. So choose wisely when you're going into that. Again, 80% LTV for purchases. That means you have to have at least 20% down. You need to have 4 to 6 months worth of reserves. What's a reserve? Well, it is a monthly principal, interest, taxes, and insurance monthly payment multiplied by however many months of reserves that we need. The better credit you have and the more experience you have, probably the less reserves that you're going to need when you're doing a fix and flip type of a transaction. And that kind of makes sense, right? If you're a first-time investor, you can still use this type of a loan, but the terms are definitely not going to be as good, and you're going to have more capital to be able to make this type of a transaction work. Here's the kicker. A lot of these investors will finance up to 100% of your rehab budget. I have a spreadsheet for you that I can have you fill out, and it just lists all the different types of repairs that could be possible in a rehab type of a situation. And then what we're going to do with that is we're going to take it to our lender and investor, and they're going to look at it and they're going to go, okay, yeah, this fits pretty good. You get a good accurate estimate in this. They have a lot of knowledge of these types of transactions, obviously, because they do lots of them. But for the most part, they're going to make sure that our budget that we're estimating is the same as kind of what they would estimate too if they're going to do a transaction transaction like this. So you can finance up to 100% of the rehab budget. That's awesome. And this is for first-time investors too. That blows my mind that you could actually, buy a property with 20% down and actually get the whole 100% of the rehab budget financed. And it's a draw type of a system where you do the work and then you get reimbursed for the work by taking a draw against that. And I think you can do that up to 4 times during the transaction. So, definitely keep your budget the way that you want it, and hopefully it makes sense in that way. Okay. You need, in terms of interest rates, right now I would say that these are probably in the low double digits. I don't want to quote any specific interest rates, but maybe anywhere from the 10 to 12% range is probably what you're looking at for these. You can have interest-only payments sometimes. Again, it just depends on the credit profile of you as the borrower, but a lot of times this will work for an interest-only payment. And they're usually expensive. They're 2 to 4 points of cost. Okay. So I think that's a pretty reasonable thing for the amount of money that they're going to give you to be able to do this project for you, because you're going to turn around and make a pretty good profit on your fix and flip, hopefully. Okay. And then the after repair value, we can lend up to 70% of that. Okay. So what is after repair value? It's called ARV. You've heard of that before. If you've been on any of the real estate investment websites, or you've heard of those different numbers, it's the value of the property after the renovations are done. So how do you determine that? Well, an appraiser will determine what the after repair value is for us when they're doing the original appraisal on the property. And so that's a number that we want to shoot for and try to hit. You could always sell it for more than that if you can, right? It just depends on the market you're in, but hopefully that makes the most sense that you can sell it for more, but that's the number we're going to use, 70% ARV. Here's a quick example for you. Let's say you're buying a fixer property and it costs $200,000. Okay. So what we would need for a down payment is 20%. That's $40,000. So our initial loan amount is going to be $160,000. Okay. But let's say that we need $40,000 for the rehab work to finance this property. Okay. And we're going to finance 100% of this. We're going to finance $40,000 of the rehab budget to be able to do our repairs and then sell the property. Okay. After we do the repairs, the property value is going to be worth $300,000. Okay. So after repairs are all done, that's the ARV. And that's the number that an appraiser is going to calculate when they're doing the initial appraisal on the property, when they're doing the purchase price of the property and trying to find the actual value at the current state of the property right now. And then after repair value, again, what the property is worth when you're done with the transaction. So 70% of 300,000, okay, that's our ARV guideline, is 280,000. So this meets our ARV guidelines because our total borrowing needs are only 200,000 in this particular example. Does that make sense? Hopefully it does. So that's an example of a good fix and flip type of a budget. I used really easy numbers, obviously, in this one, but the numbers may be different or a little bit more specific when you're trying to do your numbers in your fix and flip project on this one. Okay. There's lots of nuances to this, and not everyone is going to be exactly the same with those terms. So make sure that, like, if you're going to do this, then you have a pretty good idea. You can run it by me and say, hey, this is what I'm looking to do. And I could let you know, hey, this is a good project for us. We can get you pre-approved for that. Also, these are all the base terms for first-time investors. I mean, if you have more experience, the terms are going to be better in terms of maybe even a lower down payment. You might be able to put 15% down. You're definitely going to be able to finance 100% of the rehab budget. You might have better interest rates and less reserves, just depending on your experience of doing this. And the more of these types of loans you do, the more the investor, the lender, trusts you. And that means going forward, you're going to have a pretty good chance of getting a good loan and good terms on this. So hopefully this helps you. And if you guys decide to do a fix and flip type of a project, I'd love to chat with you about it. I'm going to put my calendar link down below. And if you get a chance, go ahead and schedule a call with me. I'd love to talk to you about a fix and flip project anywhere in the US. And hopefully I can help you out and help you become an investor or make you a more experienced investor by doing lots of these transactions with you. Have a great day, everyone. I will chat with you soon. Again, thanks for watching the show. Bye.